An advisor to China's central bank says the EU needs an effective bailout plan before China can commit to help the Eurozone. Steve is still in Cannes. We're going to talk about this fairly shortly, Steve, with Philip Chan as well. But, I mean, what's the tone from the sort of the, I don't want to really call them emerging market nations anymore. They've emerged.
Yeah, I think there is, it's not smug, but it's kind of, well, you need to sort out your problems, Europe, and you need to give us clarity on your exit plans from this crisis before we commit money. And I think the Russians and the Brazilians have been pretty adamant that they like the idea of perhaps boosting the firepower of the IMF. Less certain, though, on boosting the firepower of the EFSF, because with an SDR and the IMF's SDR, you pretty much know what you're getting and what you're doing. Whereas with the EFSF, of course, despite the rushed Eurozone meeting, Frankfurt group meetings we've seen over the last 48 hours, we still don't have the meat on the bones of the EFSF. I mean, here's another delicious irony, I guess, as well, because in previous G20 and G8 meetings, you've seen the beating up of the Chinese, of course, and to a certain extent the likes of the Germans, because they run such enormous surpluses. And there had been moves from some, such as the Americans, to try and get some form of formal limits on those surpluses. Now, well, you can't beat up on the Chinese over their currency and over their reserves and over their export bias if at the same time you're asking them for money. So I guess the Chinese are looking down on this from a pretty good position at the moment, and it's very unlikely anyone's going to be bullying them to do anything they don't want to do, certainly at this meeting.
And let's bring in, on that point, Philip Chan, Managing Director of Institutional Equity Sales at Shenyin Wanguo, which is part of the CIC, which is a sort of the investment fund. I guess if there's any money coming out, it would come from CIC. Yeah, China can take their time. I mean, why on earth would they put money into a European bailout fund? I can't see it. If it was me, I couldn't see it. I wouldn't do it.
Not directly, no. But I think it's likely. Also, there's other issues. They've got internal resistance in China to putting any bailout money in Europe. But the thing is, I think basically, obviously China wants to play on the international stage more and get involved in the IMF eventually. So I think that it's very likely that there will be some help, but
into
probably
the IMF. Though.
Maybe into the IMF, yeah, or to some vehicle related to the IMF. So in order to let the IMF decide
what would they want in return for putting more money into the IMF? Would they want greater say in how the IMF is run? What's the quid pro quo?
Probably in the long run, yes. They're try and get more votes in future, and also I think also that anyway they will also buy more physical assets from Europe, as they have been doing. I mean, they're now one of the major exporters for Germany. For imports for China from Europe is Germany. They're buying all machinery, etc.
Isn't one of the problems that China faces, though, that there are so few places that can absorb the sheer rate of growth in the amount of money they need to invest? And I'm thinking particularly the FX reserves. I mean, between June of last year and June of this year, they grew by $750 billion. And there aren't too many markets that are big enough to absorb that. There's the US, obviously. But the Eurozone's the only real credible alternative. If you believe that there's going to be another tidal wave of money coming in with QE3, let's say, from the United States, driving another flow of growth in reserves, doesn't China need Europe as much as Europe needs China at this point? China needs Europe to be successful, to be a credible alternative home for its investments.
Oh, it does. No, I mean that's what I'm saying. I think that it needs to. It will participate in some way, and it does need Europe. Yes, but. The thing is, it just, as we've said, it just won't be rushed into it. That's all. So,
Steve?
Yeah.
Philip, they've got $2 trillion burning a hole in their pocket. They're going to want to buy assets, and they're going to buy hard assets, the Chinese, just like the Japanese did in the 1980s. Surely this is the way forward. If the Europeans want Chinese assets, Chinese money, they're going to have to sell hard assets rather than offering some spurious financial product.
Yeah. No, I think absolutely right. Or it's going to have to be a mixture anyway over time, because obviously the asset sales are usually a contentious issue anyway. So I think that that's something that they'll have to work on over time. But in the meantime, China will play some role in helping Europe. That's what I expect.
What I've noticed is the interesting factor that usually the Chinese policy tends to be a little bit standoffish from the rest of the BRICS. But this time around, you're actually hearing exactly the same tonality from Brazil, from the Indians, from the Chinese, from the Russians.
Yeah.
We're happy to help Europe out, but not until you get your act together.
Yeah.
Is that a strategic shift within creating a new bloc, per se, where the strength and the money currently lie?
It could be, but I think also it's just sort of like in a way sort of biding time, because they like I said, they really do. It's very difficult for China to make a decision to help Europe unless there is some unanimity amongst the Europeans. We're getting there, I think, in the sense that this deal at the end of October, that's one good step forward, but it's just the details and etc. have to be worked out. As I said, time is on China's side, so they can wait for a little bit longer. A few months.
Philip, people have talked a lot about reform of the IMF and bringing the yuan into this SDR, which seems to be topic du jour as well. But my question for you is, there is an assumption that people think that the Chinese want more responsibility on the world stage. Well, I would ask you, is that the case? Are they just happy to trade with these nations rather than having some form of global governance of the international bodies?
No, I think they want. I think they want both, but it's like they have to do both, at the same time. Sort of getting into sort of a global governance, sort of structure. Yes, that maybe they're ready to do that, but again, that will take time for them to sort of be accepted by the world. In the meantime, there are these hard issues in Europe. They have to help Europe in some way. So
I just want to know what your current investment strategy is in China itself. I mean, we're all wondering, what's happening on the switch from a sort of an export. I know is China going higher up the value chain and exports, but also what's happening on the development inside of the domestic economy. And you make this point in your notes that China, China's not a country; it's a collection of provinces, and within the provinces, is a collection of a lot of large cities.
Yes, that's right. That's right. Well, no, I mean these smaller cities in China have been growing. But they're not headline cities. And the thing is, collectively, they now represent almost half of China's GDP. So basically, we expect that to continue. Movement, it's a long-term thing, but basically, inland movement towards the west, to central China, these areas will see faster GDP growth in future. So basically, we in terms of investment strategy, though, it's very hard for international investors to play this because you can't buy Chinese stocks directly in the Asian market. You can only go through Hong Kong or the big pools of Chinese stocks elsewhere. But actually, Hong Kong is the biggest. So you can only play it through Hong Kong, really.
Okay.